Hello and welcome. I'm Patrick Curtis, your host and chief monkey, and this is the Wall Street Oasis podcast. Join me as I talk to some of the community's most successful and inspirational members to gain valuable insight into different career paths and life in general. Let's get to it. In this episode, Arjun shares his path from a top undergraduate university to a quant role that also gave him exposure to some fundamental investing. We learn about his short stint in venture investing and why he jumped back into a quant role at a bulge bracket investment bank, as well as the programs and skills needed to land these competitive roles. Enjoy. All right, Arjun, thanks so much for joining the Wall Street Oasis podcast.
Yeah, my pleasure.
So it'd be awesome if you could just give the listeners a short summary of your bio.
Definitely. So I graduated from undergrad with a major in math and a minor in computer science. And originally, wanted to do something in the public markets. So I started with a big asset manager here in New York, where I spent a couple years out of school doing a mix of stuff, including both fundamental TMT credit investing and also some more quant related stuff, a little bit on the discretionary macro side, fixed income side. And then after that, wanted to try something kind of at the earlier stages. And so spent a short stint with like a VC here in New York, just kind of trying out the early stage investing space, and then went back into quant stuff with a bank on their investment management side, doing kind of more traditional stuff and like equity derivatives and fixed income. And then after that, wanted to push back a little bit more to the early stage space, and especially with the advent of a lot of interesting alternative data being applied there. Have been working with a couple of different firms involved in the venture and growth stages, just trying to figure out ways to bring that data into their investment processes. And I've also kind of gotten back into a master's program in data science to kind of deepen that skill set here in New York as well.
Yeah, so you're basically in the one space that has no demand at all. No, just kidding. It's like it's exploding, right?
Yeah. I mean, there's a lot of stuff happening both in the private markets, which I mentioned, but then also data science stuff in the public markets is getting really big, both at banks, hedge funds, asset managers, and then obviously like in tech as well. Just increasingly, like engineers are having a really deep data skill set to bear in addition to like whatever traditional engineering work they would have been doing.
So let's go all the way back to undergrad, just to the start of your story. You went to a top school, majored in math. Why would you torture yourself? I mean, it's funny because I had a physics teacher. He's like, you should major in physics. I'm like, I'm not smart enough. I'm not gonna major in physics just because I did well in the entry level course.
Yeah.
What convinced you to put yourself through such a rigorous? It sounds like you did a lot of computer science as well. Is that something that your family's always been into, or you just gravitated towards it?
It's a good question. I mean, I think so. My parents themselves like weren't super mathy, but kind of going farther back, actually, my great grandpa was a math professor back in India and in Burma. Interestingly, like back in the British colonial era. But so I have a little bit of math in the family tree. But for me, the interest in math kind of came from a few different places. I think what really appealed to me about it was just that it's the most kind of fundamental form of reasoning in a lot of ways. It's like really digging to the foundations of any field. Like what you see is like math at the root of it,
Right.
whether it's like sciences, social sciences, or whatever else. And so for me, I always just enjoyed that process. And I think I had my first exposure with like a proof-based kind of college level math class in high school that I took. And for me, that was just like super fun. It was also super challenging. I think like that was probably the most I'd ever been challenged in my academic career, was like getting over that initial hump of like, how do I do this proof-based like college level math? But I think after that, I was just like so enamored of it that I was like, I really want to pursue this in my undergrad. And so that's like what drew me to it. And I was kind of, I think, very idealistic for a lot of my undergrad also. Like I wasn't super interested in finance and tech kind of at the start of my undergrad career. I was just thinking mostly about like what do I want to do academically, and what do I really enjoy in that sense.
So was it a specific field in mathematics that you specialize in? I assume you had like a senior thesis of some sort, or no? Is that
Yeah, I did have a senior thesis. I was kind of a
without
generalist.
getting too geeky and going over my head? What was it? What was it about?
It was so my senior thesis was in fluid dynamics. So
Hmm.
we were trying to solve some like famous fluid dynamics problems with like friction and stuff like that. But I mean, I didn't make very much progress. I'll say that, which is okay for undergrads for the most part, more learning experience. But I was kind of a generalist,
Hmm.
regardless. Like I did a lot of CS stuff, like I mentioned. And like some probability stuff, which gets away from like more traditional like pure math and
Yeah,
but at the end of the day, like I try to take a lot of the core like analysis, algebra stuff that comes with
cool.
math as well.
Very cool. Yeah, I loved math. But so
Yeah.
you're it wasn't as good at it as you were, I'm sure. But so you kind of when did you think, hey, finance is interesting to me? Was this junior year? Did you feel late?
Yeah, it's a good question. I kind of did feel late, to be honest, because for the most part, I thought I wanted to go to grad school for most of my undergrad career, or potentially even like med school was something I was seriously considering, just given that like my family is actually in medicine, like for the most part. So,
Yeah.
so that was like where my head was for a while. But I think given that so many kids at my school, which was like a target school for a lot of financial institutions, were doing finance and like it seemed like it was kind of interesting. I could tell that interesting people that I knew were really passionate about it
Mm.
and kind of about business more generally. So I wanted to get some exposure to it, I think. And like I think my first experience was a junior year internship that summer after junior year. And I went into the recruiting process really haphazardly. Like I wasn't paying much attention to recruiting and networking and all the stuff people were doing. I was kind of like, let me just throw some stuff at the wall, and like if something sticks, I'll do an internship, and if nothing does, then I won't. But I think I was really fortunate with my first experience because it was with a sovereign wealth funds kind of hedge fund investing team,
Mhm.
and that was actually a really cool starting point for me. I think what drew me to it was that I think the team was like really just intellectual. Like you were looking at stuff at a really high level, and I think the guys were like really sharp.
Was it
So
like long short or macro based or
actually, it was very little long short. Their whole thing was that they wanted to find like idiosyncratic sources of alpha in public markets, right?
Hmm.
Which I mean will sound familiar to a lot of listeners probably. Like honestly, they kind of like summarily dismissed like pretty much any long short like
Yeah,
pitch that was coming in the doors.
yeah.
And it was like that was the summer of 2014. It was like the Argentina debt crisis was happening. So there was a lot of like interesting calls with activists, around that whole situation, and other stuff that was just more off the run, like interesting volatility arbitrage strategies or stuff like that, where you had like a couple guys that spun up a fund where they wanted to like raise some capital to put like just a couple $100 million to work, but they could show us really good ideas, at play. So that was like really the core of what we're doing there, and I think that was exciting for me because I just got to see such a variety of like really smart and interesting hedge fund managers talking about their ideas, and I think that's what really motivated me to like try doing something in the public markets coming out of school. I finally really understood the connection between finance as this like operating layer on top of the rest of business in a way where you understand like what putting money into a different situation actually means on the ground, whether that's like an interesting debt situation or
So
even like interesting kind of like growth situation, whatever the case may be.
so when landing that internship, coming from a target school, obviously it's easier to land an internship in general, but was this an on-campus thing where you just started, did you just start basically blasting it to anywhere? And this is a place that happened to interview you. And then were you ready for the interview? Did you go in or were you just like,
Honestly, pretty much that's what happened. Like in retrospect, like I was pretty fortunate that worked out for me because like as I was very haphazard with my recruiting. I was kind of like I said, if it works, it works. If it doesn't, like whatever. I wasn't.
Was your GPA super high?
I think my GPA was pretty good. Like it was above average. Not like exceptionally high Rhodes Scholar or anything like that, but
Yeah.
it was above average.
So you were getting looks being a target school, tough major.
I
Like,
was getting looks. I mean, I was definitely getting a lot of looks from like the prop trading shops and stuff like that. Like just because I was kind of their ideal profile, just like a math
yeah,
major with some CS exposure.
right.
And so I got a lot of those interviews, but I didn't find it like I didn't find that stuff as exciting at the time.
Mm,
Even though it was more mathy. I think I was more interested in trying to push a little bit more towards the fundamental stuff, which is why like this particular opportunity really stood out to me. In terms of the actual like process with that firm, then I think one of the reasons why it worked out well for me was that they were just very open minded with respect to what kind of person they wanted. Like they wanted a kind of person who was like very much like a first principles thinker, to use like that catchphrase. Someone who would really pause and like try to figure out where you want to be in the market at a given time, and not just kind of follow trends. And I think that's what stood out to me stood out to them about my candidacy, was that I kind of came in with like a very open mind,
mm,
and was like very intellectually forward and honest in like all my exchanges with them. So pretty much any conversation they would have with me about like my motivations or interests or whatever, I was like very candid throughout the
yeah.
process.
So
Was
you're a genuine person. They knew you had the brights, but you weren't trying to BS them. Basically, you're
Yeah,
straight.
yeah, exactly. Like I kind of went in, and it was pretty obvious that I didn't know a lot about finance at the time, and I
Mm,
think they were like willing to work with that. So a lot of my interviews were just like fundamental ideas in finance. They were just that I had never really been introduced to. They would just kind of have me reason them out. Like try to figure out why central banks should implement certain policies in different scenarios, right? Like I had taken like an AP macro class. That's enough to kind of like really
yeah.
parse that out, and then like play around with different ideas about how different instruments should be affected in markets, in different scenarios and stuff like that. That's what a lot of the interview process looked like for me.
So and there's very little preparation on your end. It was more just like being like, hey, here I am, kind of thing.
For the most part, honestly,
Yeah.
yeah, like, I would just show up, and
What
I
what
think
what gave
that's
you that? What gave you that confidence, man? Like, was it because you just felt like, well, I don't even know if I even want to do this, and so whatever, or was it
yeah.
more like, hey, I'm doing well, I'm at a target school, like even if I flame out and I do nothing over the summer, junior summer, it doesn't matter. Like, what was?
Yeah, honestly, it was probably more of that, which is not to say like I don't mean I like that sounds a little bit disrespectful maybe to like the firm. Like I definitely don't mean for that to happen, like be
No,
the
not
impression that
disrespectful. I
I'm
mean,
getting.
I think as a young guy, as a young kid, I think oftentimes we are overconfident.
Yeah,
I know I was like I'm like, oh, I'll have a job, I got good grades and,
yeah,
like you
yeah.
think you're
I
gonna
think
always be fine.
there's definitely a lot of that, and like I think that was always my approach, like especially in undergrad, was like I was focused on the learning and focused on the fundamentals. Like I was like, let me make sure I'm covering my bases, and then
Yep.
kind of the stuff that comes on top of that. Like I wasn't like super concerned about making sure that I was optimizing for my job search and stuff like that. So
Mm.
I mean, different people take different approaches to that. For me, like that approach worked out in a lot of ways, and I was fortunate that it did. But I think there's a lot of different ways to approach that.
Did your opinion change of that? Or like as you started going through these interviews, did you start talking to more kids about like what you wanted to do? Or you were kind of like, okay, I know I want to be near public markets. And once you got an offer, that was it? Like you just took it? Or were you like shopping like were you getting multiple internship offers? Were you tell me a little bit more about like that perspective, how it shifted a little bit
Sure.
from that junior
Yeah, I
year?
think from that process,
Because it's super important, right? Like that's a super critical
it,
inflection point for a lot of like students is like that junior year internship. It's like a lot of them are like, if I don't get that investment banking job, life is over.
yeah, yeah,
Right.
and
But like,
and
yeah.
it's and it definitely helps to the more you can optimize for your interests sooner, the better suited you're going to be to pursue those interests. There's always like a trade-off, right? So if you're someone who knows you want to do investment banking, like the sooner you can angle towards that, the better off you're going to be, right? I think in my case, with that, just I guess with that recruiting process, I was enjoying those conversations with the firms, and with that firm in particular, I was really impressed by the people I was meeting and
Mm,
excited about the learning opportunity. I think that's why I decided to pursue it. And then I think in terms of internships and full-time opportunities like senior year, thinking about how that balance works, I think my experience was and so I came out of that, like I said, wanting to do more direct public markets stuff, and so I didn't return to the firm after the internship. and like kind of threw my hat in the ring for full-time recruiting that fall of senior year. And it's definitely a little bit intimidating because you're going in, like a lot of kids are going in with the guardrails on in a sense. It's like they've got their internship figured out, they got their job lined up, they're kind of just going to hang out senior year and do their thesis, enjoy life or whatever. For me, it was like I was really like pounding the pavement that fall of my senior year to get in front of firms and to like have conversations with different alumni, like really doing a lot of networking.
So it
To
sounds it sounds like after that summer something switched, something
yeah,
flipped of like, wait a second, I'm graduating in the year, and
it was, and it wasn't. I think it was more that I had realized that this is more interesting to me than I thought it was going to be.
got it.
And so at that point, I was like, okay, let me pivot really aggressively. Instead of just like dumping in my grad school applications, I'm going
Right.
to hold off on that and really like go hard on this like finance thing for a little while. So
Okay. And so
uh,
did you know before that internship in the summer that there wasn't an offer, a full-time offer at the end of the summer, or was it something where they only offered it to a small percentage, or?
No, so there was the potential for a full-time role, and I think they would take interns like once every other year with the
Yeah.
idea that like that could potentially convert into a full-time role just because they don't have a ton of hiring,
Right.
and there was like a pretty strong alumni base from my school at that place as well. So it was one of the few firms, or we were one of the few universities that they would recruit at. But I think for me it was just kind of like a process of evolution. I realized like I didn't necessarily want to start out in that kind of more endowment or sovereign like institutional role. And I think just with conversations with the people at the firm who I had good relationships with, we were able to like kind of figure that out. And I think for me it wasn't super exciting to return to that particular opportunity. But there's a lot of people for whom that's like a great fit coming out of school.
So what were you looking more for, like more on the quant side?
So I actually was kind of split between quant stuff and fundamental stuff because I had seen like really exciting stuff that I thought worked really well in all of those spaces while I
Mm-hmm.
was with that firm. And but what I wanted to do was more direct investing, if that makes sense, which is to say like less investing in other funds and like more investing in actual like strategies and securities, like coming up and generating those myself. Like that's what I wanted to do, I guess.
Got it. Because it sounds like in the sovereign fund that you were at, it was a lot of investing in funds that were doing interesting things.
Exactly,
And so
exactly,
you were doing a lot of research into the actual technology and or whatever strategy they were implementing
exactly.
versus actually deploying the capital yourself.
Exactly. Yeah.
Okay.
And that's a great position to be in. I think especially like on the Wall Street Oasis forums and stuff, like people don't necessarily get as excited about that kind of fund of funds role or that kind of like endowment or institutional role. But I think having then seen peers go on to other places like university endowments and sovereign wealth funds and stuff like in the subsequent years, it's definitely a great place to be, just in terms of getting to do a lot of that like really high level thinking. And,
Mhm.
and it's a very intellectual space ultimately, right? Like you don't have immediate market pressures on your day to day, but you're getting to think really critically about how those markets are shaping up and how you want to play in them. So
Yeah,
it's
it can
it
be a
is a
great
very
career.
cool
Yeah.
like place to be in. Yeah,
Yeah, it can be a great career. I agree.
yeah,
I
yeah.
think it does get a little bit of a bad rep because people are like, you want to be direct because it's tends to have more exit,
Yeah, yeah.
flexibility and stuff like that.
It's yeah, and I think and there's something to be said for that. Like if you're someone who wants to maybe go into like a corp dev role at a Fortune 500 company, or it makes sense to like try to get some kind of skill set that might be more applicable in those settings.
Yeah.
But yeah, I think there's a lot of great paths in that space.
All right. So you end up hitting the pavement hard senior year. You start getting a bunch of interviews for mostly like quant-oriented hedge funds. What were you targeting? Like, it sounds like that's mainly what you're targeting, but maybe a blend between the two, fundamental.
Yeah, yeah. So I was looking at a lot of quant-oriented hedge funds just because I think it's easier to demonstrate a skill set that's more attractive to people in those settings. Which is to say, like if you want to do more fundamental hedge funds, the investment banking route or whatever makes it a lot easier to do that, just because then you have a really tangible skill set for that. But I think the quant funds were more open-minded, right? If you can demonstrate that you can do X, Y, Z, they're going to be more interested in potentially hiring you. So I
What
had
what was XYZ? Like, give me an example for the list.
so XYZ means for one, it means being good at like probability. Like I think it's kind of like one tangible area of knowledge where everybody's got some exposure and you can create a lot of interesting problems. And so there's a lot of questions people will ask that just test your ability to reason about like things probabilistically, and
Yep.
like some basic stats tied in there as well. So that's a big area. And then I think the other thing was just like coding skills. So
Mhm.
for a lot of places, it's like if you could demonstrate that you're just like pretty fast with Python or pretty fast with whatever particular scientific programming or other object-oriented programming language they were using, then they would be pretty interested in like potentially just hiring you despite.
Python or R typically.
Yeah,
Yeah.
so yeah, Python more than anything else if they were looking for like specific domain knowledge.
We're releasing a
R
Python course soon on WSO.
that's
There you
great.
go.
Yeah,
Something new.
I think yeah, pretty soon it's going to be like the new standard. I think like if you can't do basic data analysis in Python, you're probably going
In
to be
trouble.
scrapped for most jobs.
Yeah.
Uh, but we're getting there, I guess. Yeah, and so R also I think was there, but just less so. I think just because R has always been popular with statisticians, but just because it doesn't translate as well into actually like writing code and like systems.
So
You have to do some
when
work with that.
you said that totally makes sense. So when you said in terms of the probability stuff, when you're saying like have a work your way around that, are there specific programs with that as well that you need to be familiar with? So the coding Python, maybe a little bit R, but mostly Python. Um, what about the probability stuff? Is there stuff? Is there like a program that you need to be good with, or is it more like are they testing your quick math
Yeah,
probability?
I would say some of it is like quick math, but more of it is can you do a lot of the stuff that would be in like a basic like undergraduate level probability course.
Like the
So like
factorial stuff?
yeah. Like it's going to be a lot of like combinatorial kind of arguments about like how many
GMAT.
balls are going to come out of how many hats or whatever, and like
Mhm.
a lot of like conditional probability tricks and like expected values and like just a lot of those things that you would see in like a undergraduate level probability course. You'll want to really have like mastered that if
Yeah, if
you
you want to get a top 99th percentile on the GMAT, that's the top end. You need to be getting those right.
yeah.
Well, I remember
Well,
studying
I don't
that.
know too much about the GMAT. I don't want to say that. I mean,
No,
if
you
you
do. I know. I know that. I remember those are, if you're getting a lot of combinatorial and probability questions on the GMAT, it's a machine based exam. You know you're doing really
uh,
well
okay.
because it gets harder. And-
Interesting. Okay. Yeah, I guess yeah, that's a new thing, right? Like the whole dynamic tests. I think the
yeah,
GR is like that now also.
yeah. So okay, sorry to interrupt that. So it makes sense. Okay, so you basically they want to see can you do that, but that basic level probability.
Yeah.
Do you have the coding skills? And then what was the last? I interrupted you. What was the last thing, or did you?
Honestly, no. I mean, that's like mostly
Makes
what it is. I mean, different firms will throw in different stuff or like have different ideas about what they want,
cool.
and I mean, the whole space of like just quant recruiting can be so much more varied than a lot of other more traditional finance roles that it can be tough. But I mean, there's a lot of great content on the site, like people answering questions about how to
Can,
prepare those kinds of ratings and stuff.
can you educate me a little bit on the kind of the trends of high frequency trading versus like okay so what the race to the bottom type of firms where they're just going for complete speed over over something that a fund that uses quants still
For sure.
uses quants. Can you tell me like a little bit like what does it look like percentage wise in terms of capital being put to work versus
Yeah. So I guess I'm not an expert on the high frequency space, let me say, because I
yep.
haven't actually worked in like high frequency trading. But I mean, I can try to give like a little bit of a sense on that because I mean, high frequency trading is definitely like very popular for a lot of undergrads, and it's like definitely very lucrative in terms of like what firms are doing. But I mean, I think it tends to be the case that high frequency firms are going to be putting less money to work than a lot of these like big institutional like quant funds, especially like these quant asset managers that
Mm.
have like billions and over 100 billion or whatever under management in a lot of cases. So
Yep.
so there's definitely a difference there. I think high frequency has changed a lot in the last like 5 to 10 years. In the advent of high frequency, which you can read about in like some of these famous books like forget the name of the
Michael Lewis's
Michael
book.
Lewis one. Yeah,
I
the
can't remember it either.
Flash Boys. Yeah.
Flash Boys.
Uh,
Flash Boys.
yeah. So I mean, I think that gives a great picture of like kind of what it looked like in the origin to some extent of high frequency trading, but I think things have changed a lot, and just because markets have become so much more efficient and a lot of these things have kind of been competed and arbitraged away.
Hmm.
Um, my understanding is that like profits have like actually really shrunk in high frequency by like a factor of several times over.
Yeah.
But with that being said, like I'm sure the firms that are doing well are still doing exceptionally well, and maybe that shrinkage doesn't even apply to them. Who knows? Like they tend to be pretty secretive, I guess.
It's
But
such a
like
black, yeah, it's such a black box. Like nobody knows. And
yeah.
like
So that's
who are these firms? I guess Renaissance and probably does some of it, and like some of
yeah,
this
Renaissance. I guess like the other big names in high frequency are like HRT and like Tower Research, Jane Street, a lot of these
Main
guys.
Street.
And yeah, and then there's like a lot of Chicago-based ones that are doing pretty well. I think like Citadel Securities still does pretty well. Like there's a bunch of new ones out there that I'm
Cool.
like not super familiar with. Yeah, but yeah, and I think that contrasts with a lot of the more kind of like medium to long-term hedge fund strategies that even when you look at like the Two Sigmas of the world, like they're they tried to get into some more high frequency like prop trading stuff by like spinning up Two Sigma Securities or something. It had some like unique name
Hmm.
that's like independent of their traditional like hedge fund operation. But it's tough to actually break into that, right? To like to bootstrap that and get off the ground is a bit of a challenge. So not anyone can just do it. And so yeah, so like
Well,
a
it's
lot
a
of these
huge capital investment, right, for the
for
machines
sure.
and stuff.
For
Yeah.
sure. Yeah. I mean, it's very intensive, like engineering wise, to like, hire that expertise and then bring people on and then actually build the systems that are going to compete while actually then trying to like layer in some actual alpha on top of that.
Yeah.
It's pretty challenging. It's not a trivial undertaking, even for a firm that's as like good as Two Sigma is in terms of its like technical depth and expertise and stuff
And
like
there aren't
that.
even that many seats, right? They're really looking for those like top experts. It's not
Yeah,
simple. Yeah.
yeah, I think that's largely true. But I mean, again, like I don't want to pitch myself as an expert on
No,
everything,
it's fine. It's
but
fine.
yeah. But I think it is true that I mean these firms tend to be pretty small, and it's one thing even when you talk about the firm as a whole, right? But then you look at the firm, and within the firm, there's going to be like one desk that's like really killing it on, like orange juice futures or whatever it is, right?
Yeah.
And that's the team that's bringing in all the money, but it's like these other teams are just kind of like there to try and fill the gaps and figure out how do we make money in this other market or that market. And so, but I mean, there's exciting opportunities for sure. There's exciting opportunities in the space, and a lot of people are doing very well.
Cool. So let's go back to your story. So you're at this large asset manager, basically right out of school. You ended up getting a job. Was it something where it was similar to kind of the internship recruiting process where you knew like these people are interesting, or was it more like, oh man, it's winter, I'm graduating in a few months, like I'm just going to take this offer?
No, yeah, I mean, I was definitely excited about the opportunity. I think it was pretty unique in that, like, it gave me the chance to work both on the fundamental side and on the quant side, and I think that's like what really excited me about the opportunity. And so, like I said, like I was able to go in and like start with some discretionary macro quant stuff, and then also able to like switch over to do like the fundamental high yield stuff that I like thought was pretty interesting, and like just try my hands at a lot of different areas. And meanwhile, also like try to be involved with early like blockchain efforts that the firm was trying to get their hands into, and like early data science stuff that they're trying to put into practice. So I think for me that was like a great opportunity, just because like they had a little bit of everything that I really wanted to get my hands wet with starting out.
How much Bitcoin do you own? No, just kidding. Hopefully a lot.
Yeah, apparently I have to tell the government that now. So apparently that's like the new tax thing this year. You have to
You
report
have too much?
your
Yeah.
holdings. I have enough. I have enough. I'll keep what I got. So
Yeah, same here. Probably a lot less than you. I'm sure you were buying it up earlier.
uh, I mean, the cool thing actually was that I was getting into it just around with like the time that Ethereum was being launched, like kind of that late 2015, early 2016 range right there.
Early enough. Yeah.
Yeah.
Before it exploded. Yeah. That's cool. You think we're heading back up into a bull market now?
For crypto, you
Yeah,
mean?
yeah, crypto in general.
Yeah, you know, I follow the space less closely than I used to also, but I do think I do think that like there's going to be persistent value in like Bitcoin and Ether for quite a while probably.
Hmm.
But I mean, whether we're going to see like a quote bull market for crypto as a whole, I think that's less clear. I don't think we're going to see all these tokens popping up and getting a lot of value the way we did in that big run in early 2018 or whatever,
Late 2017
late
maybe.
2017. Yeah, I think
Yeah,
that's probably I think not happening anytime soon for sure. Yeah.
that's fine. So you got to kind of taste a little bit of fundamental, a little bit of quant. You were there for a few years, and then you kind of moved on. Tell me why you moved on. What was the thought process of like as you were coming up, thinking of like, hey, I think I want to try something new. Tell me a little bit about
Yeah.
that whole process.
Yeah, so I think for me it was that I'd had an interest in just the early stage space for a little while at that time also. So
Hmm.
like I said, I think the finance exposure I got in that first internship really opened my eyes to just like what that world kind of looks like and just how finance and business more broadly are like shaped up together. But then I kind of like paid a little bit more attention to all right, so this new technology that I'm seeing, like how does that exist? What type of firms does it exist in? Where do those firms get their money? And like how do they fit into this like larger financial picture that I'm kind of learning more and more about bit by bit? And I think I was excited about it because thinking about those problems at the early stages is like very fun. I think thinking about like just new technologies, how they're going to impact business and society more broadly, and how firms are kind of deploying those in unique ways. I think that was all very fun for me, and so I was kind of like drawn to venture stuff, just early stage investing, and was trying to learn everything about that I could at the time, and was starting to get involved a little bit in New York's like venture scene, just like talking to alumni who are involved with it, and understanding how companies get formed. And I think I also saw potentially working with or starting a company at early stages as like a very exciting potential thing that I wanted to explore a little bit more seriously, just because you can kind of really, I think, like really get a chance to contribute some unique value in those kinds of contexts. And I think the other thing to think about is like what I've always enjoyed about investing has been that you can develop some unique thesis or idea about a market or a space and then go place a bet on it, right? You can find the best company or find the best trade idea
Yep.
and then go try to execute on that in a way that you think is going to work. But if you really have conviction in that idea or in the evolution of some market in some way, the ultimate like bet to place on it is to try to start a company that's going to
And
like
so
take
did
advantage
you
of.
did you ever start
Um,
one?
did not start a company, but that's something that I still like think about. But I'm not there at this point, so we'll see what happens with that. But I think that's essentially what like excited me about the early stage space. And so I left the firm after a couple of years, and then initially just like took a little bit of time to work with an early stage like seed fund here in New York, on a short-term basis, while exploring other options. And it was a positive experience. Like I think I learned a lot about it, but did ultimately I think go back into the quant space, like I said afterwards.
So you were kind of almost like a intern for this early seed stage. What were you doing for them? Just like looking at tons of deals coming across or potential deals and helping
Yeah,
them.
exactly. Like it was kind of it was super open ended, and I think the partners there were great. It just about bringing in like young people to get different kinds of exposure,
Yeah.
and I think and they also like just gave me a ton of responsibility, despite my kind of like the lack of experience in venture at that time. So I got to like they would just like dump a deal on me. It would be like, hey, we need to decide whether we want to invest in our pro rata in this like company. Can you just like go talk to like this list of people and then come back to us with like what you think we should do? I think they were doing their own thinking certainly at the same time,
Mhm.
but it was cool to have like so much influence and input in the investment process there.
So why
Uh,
not stay there? You just felt like it was more. Were you feeling like, hey, this is just gonna be repeating itself? Like I'm gonna be doing the same thing over and over again? Like
so
why?
yeah, so I think I was definitely I think coming out of that, like So that was designed to be a short-term stint, and like it was a small firm, so they weren't trying to hire people full time,
Got it.
kind of junior levels. But yeah, I mean, I think I would have been. I was definitely interested in potentially like working in venture longer. And I think I was taking a pretty wide lens with my search at that time, like
Mm.
talking to other venture funds, but then also kind of like just looking opportunistically at other gigs with like startups, and looking opportunistically at like other inbound from quant opportunities as well, which I was getting a lot of. And so I mean, I think for me the process came down to like, where do I think I'm getting the opportunity to work with like just the most interesting team.
Yeah.
And I think it happened to be with another quant opportunity, and I think that's like what ultimately made the decision for me.
So yeah, you ended up at an investment management division of a large firm,
Yep.
and you could almost call yourself like a quant there, right? So
Yeah, I
what
think
is
you could
it,
do that. Kind of like a quant developer almost at that point.
was
So
your day to day similar to as the first place, or did you let go of the fundamental? Was it now just pure quant?
yeah, so I let go of the quantum fundamental, and I think the other thing that was very different about the day to day was just that, given that given that the scale is different at a bank versus like an asset manager, it's going to be like everything that we did was just much more systematized. So it wasn't just a matter of doing some analysis and letting it live in an Excel spreadsheet. It was like, okay, we have to then take that and understand how we build some like really robust like code that we can like plug into our whole code base, and understand like make sure all the kinks are worked out in terms of how that's going to work, and then also like go back and really like refactor that code and make sure everything is like done really well, and test that out. And so, and like all of that added time and just like a different dimension to the process, which I think was really great actually. I mean, personally, I think that's like how I think that's how firms need to approach a lot of the work that they're doing, is like, how do we systematize this so that we can kind of have compounding knowledge and like returns on that compounding knowledge. And I think when you look at like kind of a lot of the famous funds, like the renaissances of the world or something like that, like you hear about how that's integral to their process. It's like they have massive internal wikis where they've like documented every single like tiny tweak they've ever done on a strategy.
Right.
And so I mean, and this isn't quite that what I'm describing, but just like any level of just like systematization and like good code practice and engineering practice, I think is like going to be the foundation for like good business practice going forward.
And a large bank, a quant in a large bank, what are you working like? Wasn't like all the prop stuff is gone, right? So it's not proprietary money.
Yeah,
So
yeah.
what do you what money are you managing? Is it mostly just like market making type?
So like I said, since I was on kind of the investment management side, we were managing clients' money. Like
Right.
we had like funds and like, and
But
stuff like
there were specific quant funds that the clients wanted.
exactly, yeah. So and it would be like, we'd have specific strategies that we'd run, and we'd pitch that to a client or something
Got
like
it.
that. So there's a lot of that kind of thing. And yeah, I guess the other thing to think about just with quants at banks, and this gets a little bit away from like the question you just asked, but the other
Mm.
thing to think about quants at banks is just that every part of banks is becoming more and more quant, so to speak, right? And when you look at a lot of the dialogue coming out of some of these leading banks in New York now, like a lot of it is just about how do we build businesses that are like banking as a service is like that keyword that like is being thrown out increasingly now, right? It's like
Yeah.
I think banks are becoming hip to the idea that a lot of the traditional like alphas and like idiosyncrasies and illiquidities in the market that we used to be able to capture just by virtue of our position in these markets are kind of evaporating. And so what we need to do is figure out like, how do we provide systematic value for clients, and how do we make like all of the work that we've done and all the knowledge that we've accrued something that's accessible to people that they can like pay for, and then kind of layer in on top of whatever other work that they're doing, and whatever other services we're providing them as clients.
Yeah, I mean, it's a super interesting time right now.
Mm-hmm.
I think it's it's like what's it going to look like in 10 years, 15 years, 20 years? It's going to be very different. I feel like.
Yeah, for sure. Even 5 years, honestly. Like if you just
Yeah.
look at what these places are doing now, and just like what new businesses are being spun up, and whatnot, it's pretty incredible. Just like the pace of change as like banks try to keep up with fintech and stuff like that.
I know it's nuts.
Yeah.
Probably pretty acquisitive too. I mean, a lot of them are just a lot of them are just buying up.
Yeah.
They're like, oh, that looks like it's gonna explode. Let's get that.
Yeah, buying up businesses and then yeah, I mean a lot of like proprietary or like balance sheet investments that are coming into like early stage companies, stuff like that. It's a very like, I think like fast moving space, and I think some banks are doing a better job than others of like staying on top of it. But what you're seeing everybody like kind of stay with it to some extent.
Cool. So you kind of after a stint there, a little over a year, you kind of spun out on your own. It sounds like.
Yeah. So, coming out of that, I had just a couple interesting opportunities. At that point, I had kind of built like this small, like little niche to some extent of like early stage investing experience, even just to a small extent, combined with like some earlier like public markets TMT stuff.
Mhm.
In addition to my like quant experience and kind of developer experience at that point, that gave me an interesting entry point to like work with some of these earlier stage funds to help them figure out, again, ways to bring data into the investment process and thinking about how you can apply that a little bit better to both the sourcing of companies and also the evaluation of companies for those firms. So there was a little bit of that combined with like a couple other like miscellaneous like related projects that I was doing for them.
Do you feel like a lot of the skills you're bringing is not even necessarily the data manipulation, but the actual access and where to find it?
Yeah, I think
Because
there's
it's as good as your data source, right? Like, so if you could actually get access to um, data from, I guess it's looking at problems in different ways, but let's say there's a company, a SaaS business you're looking at investing, if you could get some access to just their churn and their then
mhm.
whatever, boom,
Yeah,
you have your answer.
yeah. It's tricky. I mean, I think you have to be very creative with like how you're trying to get some of this data, and I think different approaches have taken different firms have taken very different approaches. Like I think you look at Social Capital, which is one of the bigger names in the Valley. That's like kind of since had a little blow up, late last year, but with Chamath Palihapitiya. So they had
For the
their
people who aren't familiar, can you give us an explanation of that?
Yeah, so basically, so Chamath was an early employee at Facebook, and so he made a ton of money and started doing a lot of angel investments. Was able to launch Social Capital, and for a while, it was like a very hot fund in the Valley, probably for like most of the early 2010s into mid 2010s. I think they were just considered one of the like hottest up and coming venture funds in terms of like their access and a lot of the early rounds that they had led and part of their idea, was let's try to make ourselves really accessible for entrepreneurs. Let's try to like have a spreadsheet where they can go and plug in all these numbers and say, if you're clearing these marks, like we'll have conversation with you and like we'll be ready to write a check really quickly. Um, and it's debatable to what extent that was like really something that served their investment process versus just kind of like window dressing to kind of
Yeah.
like get inbound deal flow from entrepreneurs and kind of like make a name for themselves. But my point being that's a creative way to try and get numbers on these companies, in the door, so you can
Yeah.
actually start to figure out who you want to invest in.
You said they ended up blowing up. They ended up making a couple bad
Yeah,
investments.
and so I think what happened is Chamath, who is the founder of the firm, he's like a very colorful guy. Like you can go watch some of his YouTube videos. They're really fun to listen to actually. Like
Okay.
he's a very interesting guy, but he's very opinionated, and I guess he felt like the direction of venture capital was like not very healthy for the most part, and his argument was basically like it's kind of like almost like a pump and dump, if you will, like venture capital. Like you're putting money into the firm, and you're raising the next fund based on follow-ons that you're getting from other founder investors in the ecosystem, and like you have all these like huge companies going bigger and bigger and bigger, and then to the point where like WeWork was kind of bursting into the scene with their huge late stage fund, and so I think that was kind of a big part of his narrative at the time as well. And what he ended up doing was just like winding down the fund. He was like, "We're not going to do this anymore. We like this is just kind of BS, and I don't want to be a part of this." So
You think it was just a frustration out of just crazy valuations and stuff, how everything
it,
was
I think
completely
in his
over.
case, yeah, I think he was making the case that yeah, that this whole ecosystem was kind of built on a house of cards, like is what he was saying. That I mean, you have all these VCs that are putting money into like SF real estate and Google ads and Facebook ads, and like it's just this huge closed loop where money is just like flowing into the pockets of Google and Facebook, and there's not really like real value that's being created by these companies. Again, I'm not endorsing these beliefs necessarily.
Yeah. No, yeah, I hear you.
Reporting to you kind of to the best of my ability what I think a lot of his arguments
I've heard that argument, and
yeah
it's not necessarily that potentially that far from the truth. I mean,
yeah and people will point to like WeWork or whatever now, but I mean, but on the other hand, like I think you have to look at a lot of the successes of the Silicon Valley ecosystem also, right? Like there's a ton of like the Cloudflare and Datadog and like all these other companies that IPO'd last year also that are like great companies, Zoom, that are like doing really well. We're on a Zoom call right now, so
yeah, exactly.
yeah.
Great. So then now I guess what's next for you? What's the plan?
Yeah, so for me, I'm like I said, I'm finishing this master's right now in data science, where I'm getting to just like get a lot deeper into some of these skills that I've been wanting to get deeper into, like taking an advanced deep learning projects class right now, and like taking an NLP class, and just like kind of learning a lot of those fundamentals. And so, I think for me, the next step is like trying to figure out how to bring those skills to bear, you know, either in the public markets again, or potentially like at an interesting startup or late stage company. Like I think those are probably the two corners that I find most interesting. I think private markets are definitely interesting as well. But I think there's just a lot more uncertainty around like what you're able to really achieve there, and like how much value you can add as a quant. I think again, there's exciting stuff, and I wouldn't rule that out, but we'll see. We'll see where that leads. I think for me, the driving principle is really where are there like risk premia that there's new data that I can figure out a way to apply to capture that risk premia, right? Where is that frontier moving as data becomes more and more available, and as these problems become more and more readily solvable. So that's like continuously moving out, right? Like equities is gone, fixed income is still potentially there, and private markets are kind of an interesting place, but then also you look at just what tech companies are doing. Like I think Open Door is a great example of like the type of idea that I'm talking about, where there was never traditionally a market for homes, right? You couldn't just like go and buy single family homes and like flip them really easily. But like Open Door is essentially trying to be like a market maker for that in some sense, right? Like there's a huge operational component, but at its core, that's kind of the idea. And so and now there's a ton of firms that have piggybacked on that, and you can argue about whether they're really going to be able to like be a viable business and like capture enough margin to make that work. But I think if you can have some sort of like unique data moat to kind of like fuel a really like strong position there, and like you see other interesting companies, like I could go on, but other interesting companies that are finding new ways to do that, and I think that's like a very exciting opportunity right now.
So potentially going to work for one of them, maybe.
Yeah, potentially going to work for one of them, or finding a way to try and like spin up something to try and take advantage of some of that stuff.
Very cool.
Yeah,
it's fun. Any advice you'd give to your younger self, kind of looking back now where you're at now?
Oh, that's a good question. I mean, it's tough. It's tough because hindsight is 2020. You always think,
why did you do that, man?
Yeah, if I just done that differently, or something else differently. But I mean, you never know how things are going to play out necessarily. But with that said, like probably I would say try to have stronger mentors, sooner. I think that's probably one thing that I try to work on. Like I always feel like I can figure stuff out, and I'm really excited to get going and like dive into something on my own. There's a lot of great resources today that like help you do that, but I think talking to people that have like just been there and seen more things than you just opens your eyes way faster, right? And I think a lot of the things that I learned, I probably could have learned faster, and probably benefited from just like having people that I was talking to about those at earlier stages.
Yeah, you could skip a lot of the pain of like,
yeah,
or at least accelerate the learning curve, or flatten the learning curve.
Yeah. And so I guess by the time you're old enough to realize you should listen to older people, it's like,
hey, I got the gray beard, man. You got to listen to me now, right?
yeah, exactly. Here for your wisdom.
Well, Arjun, thanks so much for taking the time. I really appreciate it.
Yeah, definitely. Thanks for having me on.
And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick at wallstreetoasis.com. And until next time.